Although the sector was generally more buoyant throughout the year, supermarket operator activity has remained predominantly focused on lease regears and store repurposing. The discounter duo Aldi and Lidl remain actively on the expansion trail. Although their like-for-like sales growth has in fact fallen, Aldi continued to inch closer to Big Four status, and they had double-digit sales growth in 2019. And with a market share of just over 8% now, they're now the nation's 5th largest grocer, only around 2% behind Morrisons. Lidl was similarly aggressive in terms of expansion, with plans to open 230 stores over the next 3 years. For them, London remains the key target, with £500 million earmarked for growth in the capital. In key locations in London and the South East, Lidl were also being more creative, acquiring non-food stores that were significantly larger than their standard requirements, their intention being to obtain planning consent on part and subletting the remainder to other non-food retailers. Tesco remains the grocery bellwether, and it was a boost to the whole sector when the credit ratings agency Moody's moved it back to an investment grade rating last summer. As he started clearing his desk, Tesco's outgoing CEO Dave Lewis announced, "The turnaround is complete." For Tesco, convenience is still a key target for growth. A further 150 express stores are being targeted over the next 3 years, predominantly in high street locations. Sainsbury's closed a further 70 Argos stores in the last 12 months as they redeployed the brand into existing supermarkets. They also closed 15 older non-performing supermarkets and 40 convenience stores, but to counteract this, they announced the opening of 10 new supermarkets and 100 new convenience stores. Morrisons opened new stores in Cambridge and Canning Town, which are designed around their food market and food to go concepts. But they also closed 4 underperforming stores, one of which in Crawley was only 5 years old. Morrisons' Fresh Look refurbishment programme was a key part of their strategy for the year, as they carried out major works and they were refitting and refreshing stores to improve the shopping experience. Asda's expansion strategy was very much on hold following the blocked merger with Sainsbury's in April and rumours of a possible sale of the business. But the company did launch its new Deal depot in Bristol in October, which is seen by many as a foray into wholesale in competition with the Tesco Booker tie-up. So in 2020 we expect to see a continuation of the Big Four restructuring their portfolios. In the last couple of years we've seen a range of lease regears where the tenants extend their lease terms in return for a share of the marriage value, and that's taken the form of cash, rent-free periods and in some cases rent reductions. Now the terms available depend very much on the location and the quality of the store, as well as alternative use values and, for example, how high the rent is compared to a store's contribution to the business. In terms of lease renewals, there have been a handful of these on poor stores outside London where the operators have effectively been able to drive an extremely hard bargain, and this has led to significant rent reductions being agreed. However, the next couple of years will see operators facing the first lease renewals on good quality stores that they won't want to lose. The rents agreed on these renewals will give a much clearer picture of where the current market values for these stores are perceived to be. For the present, we anticipate a continuation of landlords looking to re-gear leases to protect their investment values, and of course the operators looking to share in the marriage value from the re-gears. And of course, the discounters will continue to try to grow their market share through aggressive and increasingly creative growth strategies.